Yes, we know where we are. 19.68% negative index return on the equities market so far in 2018. Barring any last-minute rally, will be ending 2018 on the negative notes. But let's get a sense of how the year has been so far and what's the likely playbook or what will play out in the new year. Eromosale Aziba is an investment analyst with Afrinvest, and we're touching base with him this morning live through our studios at the Nigerian Stock Exchange in downtown Lagos. Eromosale, good morning. Yes, the index has been generally negative, nearly 20% since year start, but would I have made money somehow, even with this downturn for the market in the current year?
Definitely. Look, I mean, the numbers that we're tracking, the minus 19.7%, is looking at the index as a whole, but we're quite certain that it will be very difficult to find any investor who actually buys all the stocks that are listed on the index. So, I mean, we've had some stocks that have gained on a year-to-date basis in the market. I mean, looking at some stocks in the insurance sector, I know the likes of Custodian and some other players, they've also seen them gain within the year. And also considering the fact that at different points in time in the year, we've also had some periods of gain, then you now have that followed up with some sustained period of profit taking. You know, for investors who were able to trade speculatively, come in for a short time and then exit, we've also been able to make some capital gains during this period. But I mean, if you're looking at how the market has moved this year compared with last year, then you definitely see that it's been quite poor this year.
Yes. So when we report that the market is negative by whatever percentage, like you rightly put it, nobody buys the entire market. I'm not sure Aliko Dangote does that as well. Femi Otodola, whatever, the big boys. So I'm not sure they buy the whole stocks on the market. You got to pick your portfolio. So you got to pick your and the assets you put in particular portfolio. Yeah. So that means that I could have made money in some big, small companies. For example, we started the year, nobody ever thought that insurance folks will have some rallies somewhere within the middle of the year with a recapitalization, whatever issue that's now been pushed aside. But look at how they just end up. So I could as well made money even when we say the index is down or the market cap is down. There are still folks who are making money. They're not just telling me.
Exactly. There's still folks who are making money in the market because, I mean, if you look at activity levels, you can see there's a sizable proportion of volumes traded in the market, and that captures both buying activity and selling activity in the market. And if you also consider the fact that for an investor to actually be able to sell a stock, it means there's someone on the other end who is willing to buy. So based on timing of entry into the market, some investors have been able to make some gains during the year, despite the fact that the overall performance has remained quite negative.
Aside insurance, any other sector that you think this year has proved to be a little bit resilient, where if you are a speculator, I don't think I like that phrase, that word sometimes, but if you're a smart investor, yeah, that's the word I'm looking for, smart investor. You look at smart money. Where would that sector, aside insurance? Tell me.
Well, for this year, I think we've also seen some gains in the oil and gas space, looking at Seplat as well in the market, and how we've seen some buy activity during the year. You know, for looking at some of the other bellwethers in the market, so if you look at the likes of Dangote Cement, you look at GT Bank, you look at Zenith, UBA, and Nigerian breweries, and a couple of other bellwethers in the market, they're all in the red on a year-to-date performance basis. And this is largely tied to the fact that following the influx of foreign investors back into our markets last year, we saw some of these stocks rally to significantly high levels, some of them even rising to all-time highs. And this was sustained into January when the market was up about 17%. We saw sustained gains in these stocks. And for a lot of investors, we've seen sell-offs since that period. Now, the thing is, for an investor who might have come into the market prior to the start of the rally in about May last year, even at current prices, your portfolio might actually still be up, only that your profits that you'd have made would have declined.
Okay, so let's talk about next year. What strategies for equities investing in 2019?
Well, so the one drawback that has plagued market performance this year has been the upcoming general elections. I mean, for us at the start of the year, we noted this as a major drag in market, although we expected that it would be more apparent in the second half of the year. But trading activities this year has signified that it was actually a big issue for investors, as since February, we've seen sell-offs in the market. Now, what we believe is following the conclusion of the elections next year, we expect to see foreign investors return to the market. And as a result of that, we also expect to see domestic investors also jump on that bandwagon, which would also drive market performance upwards. Now, our conviction is further buttressed by the fact that if you look at current pricing of our markets relative to peers, you can see that the Nigerian stocks are somewhat undervalued. And I mean, for foreign investors who are looking to invest in this emerging and frontier market assets in 2019, the Nigerian market presents a good opportunity for them. And this is another factor that we believe could drive market performance in 2019. I think another positive that we could point to could be the possible listing of MTN on the exchange, and other IPOs that could possibly come up in the market, which could also boost sentiment. But by and large, the one factor that we can point to that would largely determine how the market will go next year is the conclusion of the elections and the expected return of foreign investors.
Do you think there'll be a bit more clarity in how the market will move early in the year when we get to January and folks are looking at the year in view, roll up all the 2018 calendar and open up a new page and say, look, this is a new year, 365 days, we need to strategize. The election will come and go. We'll do all that within the first quarter, whatever happens, then we move on from there. So do you see these for what plays here for local investors? And of course, I know the foreign investors will be back anyway.
Well, at the start of the year, we might still see some sell-offs in the market, again, still tied to uncertainties around the general elections. But at the same time, we might see investors start to re-strategize in terms of their investment horizon on the market, adopting a more medium to long-term approach to investing in the Nigerian market. Because like you just mentioned, the elections will come and go, and it will get to a period when investors will have to start looking at the markets on a fundamental basis to see what stocks present the best opportunity for them in terms of capital appreciation, dividend income, and the likes. So we might start to see investors position from January. But from all indications at the moment, the general elections still remain up in minds of investors.
Talk as we wrap up the year and look into 2019, break it down in days and weeks ahead. Thank you very much, Jerome Saleh Aziba.